Good morning, everyone. Namaste. Thank you for joining this first panel of two today. My name is Naveen Suri and I'm your moderator. Clearly, in the finance world, it's been quite a edge of the seat weekend with Silicon Valley Bank going down, Signature Bank going down. So I had a different opening 6 hours ago. 4 hours ago it was different. 2 hours ago it is different. I don't know what I'm going to open with, but let's get started. It's an incredible panel that we have today. We have, to my left, the Superman of the payments world, Vijay. Doesn't need any introduction. Vijay, welcome.
Thank you. Thank you.
We have Swapnindu, who is the Chief FinTech Officer of the MAS, the Monetary Authority of Singapore, also Chairman of the Board of Elevandi, which is the company which runs the Singapore FinTech Festival. Of course, he's, I think, in my view, the global face of FinTech policy making. I don't think there's another person like that in the industry. So, welcome, Sob. We have Walter on. Walter's, I think, just busy counting money because very recently he sold his first startup to Aviva. I think the whole transaction was a little over $3 billion. Yeah. And so he's holidaying a lot these days. But he's just started his second company called Chocolate, which you can see on his t-shirt, and he's currently in the alpha of that product. We have Binru, who is a China expert, a blockchain goddess. She's the president of the Singapore Blockchain Association. She used to be the international head for Ping An's One Connect platform for banks. Binru, welcome.
Thank you.
And we have David, who's here from NTU, who heads innovation. So David, Vijay has a question for you a little bit later.
Okay.
So let's get started. The topic of the panel is why Asia is leading FinTech globally. Can I just quickly ask, with a show of hands, are there any startups in this room right now? This is not a startup.
They're all behind.
Okay. So, just to give a little bit of numbers, a little bit of flavor, 2022, FinTech investment globally was down. In 2021, the investment into FinTech was about $240 billion. It went down by $80 billion in 2022 to about 160. Americas were down, EMEA was down, Asia was slightly up. And that goes to show the resilience of the region. So hence the topic of the panel. I'm hoping that in the next 40 minutes or so, I can get to about 3 questions to each of our panelists. So I'm going to start with Vijay first. And we all seem to be in an extreme funding winter for startups over the last 12 to 14 months. But Asia seems to be that beacon of hope. America's funding is down, EMEA funding is down, Asia is at par, a little bit higher. What, in your view, is contributing to this?
So my understanding is that Asia is the rofer of innovation in the world. The challenge has been that did we ever have risk capital or not in the country? I mean, look at the Indians. We are the ones, or Asians, we are the ones, and at large, Indian, Chinese, I'm going to include everybody from Southeast Asia, Asia. If you go in US and you see the biggest of the corporations in technology innovations, they're driven by the minds and brains of Asia, significantly. Obviously, the world is at large horizontal. So now, what happened is that when world looked up to West for financial services innovation, it was restricted by the depth and the restrictions of, let's say, big lobby organizations that were there. I mean, that incumbents have been very strong in those countries. Thanks, it's working now. So, so incumbents have been there versus in Asia, you have regulators like Supindu here, you have companies like many of us in this audience here, And we have an obligation to solve our country's problem. I have to repeat this line once again, that we in Asia have obligation to solve our country's problem in the mobile age by ourselves, because if we were to pick up the solutions that were happening in the West, they have not solved for us. If the West model of financial services was successful, then it would have been, financial inclusion should have not been a problem to be looked after, because we've been following that. And once the citizens of our region started to use mobile phone, it meant that we can build solutions led by mobile phone, which to be clear is not the case when you look at the rest of the world. And here in Asia, the mobile phone is the magic machine. So I'd say the innovation in financial system led by mobile phones and data that is carrying inside it, real-time transactions of payment, real-time merchant payments, QR codes, etc. Yeah. So real-time mobile payments for the merchants or money transfer, all those innovations that all of us know about could only be possible when somebody here would have sorted out. Another second problem is that in India or in Asia, we have different kind of commercial models where the money is not taken as if that it is a tool to gain the convenience. It is taken that money is very precious. I have to, instead of convenience, save the money. Now that mindset is a very different mindset for a different solution side of the world. And I think, so customer demand, traditional solutions, incredible regulatory environment, and the risk capital insight that came to Asia, different kind of capital could come. I mean, we have to give it to Japan, we have to give it to China, we have to give it to Singapore. That countries like India were very blessed to get lots of risk capital. And when I go in all South Asian countries, all these countries sort of became the hub to raise the capital. So we no more look up to the West also for capital. That's also one of the big reasons. So here it is, the perfect recipe. A problem, an opportunity, and an environment. Why wouldn't be so much growing?
Excellent, excellent. I completely agree with that. So I have a two-part question to you. So you're coming off 3 successive years of funding into Singapore, continuing to rise despite it being so difficult. Now, are these policies of the past that are still giving dividend? And is it only for Singapore? And what is your perspective on Asia Pacific? How is Asia continuing to generate that much of capital, attract that much of capital?
Think about, we have 2 billion exit side of me, clearly speaks to the Asian growth. I think Vijay made a good point. The Asian demand was so high, and the kind of solution which was designed for Asia came from the Asian ecosystem. So it is made for Asia strategy, which really helped Asia to be the significant hub in this space. Now your question on policy versus what happened because of the policies, I would say a mixture of two. We had policy implementation supporting startups or supporting financial sector fintechs to get into the financial sector as a regulated entity, did pay huge dividend to us as part of the policy shift. But more importantly, I think, Naveen, is that the role regulators played in enabling public infrastructure. I'm pretty sure Vijay would have not spoken the way he's speaking today if India Stack didn't exist. UPI rail was not there. His few billion of customers coming straight through on the mobile phone was just impossible.
Not possible.
Similarly for Singapore, having a pay now infrastructure or a SG Findex infrastructure, the role of public infrastructure, the SingPass infrastructure, Aadhaar equivalent, played a huge role in getting fintech to succeed, because we required a digital highway, we required a digital infrastructure. And public policymaker, when they built this regulation, they also thought about public rails, which is unique in Asia. I don't think this happens in West, right? You don't see it in the US, you don't see it in UK, you see it in Singapore, you see it in India, you are seeing in Thailand, you are seeing it in Malaysia, that regulators are hyperactive in building policy and infrastructure together, which is a rare combination in Asian market. That led to this Asian growth.
Understood. Completely agree. I recall 2016 when I started my startup, Swapnindu called me to say, can you move to a particular office where we will give you subsidized rent? And that meant that I could extend my little bit of cash a little bit more, because the government came in to help me as a startup and see that I can continue to grow. So I'm first-hand beneficiary of it. Walter, I have a very unique question for you.
Sure.
Which is, of course, as the world is closing down, it looks like, and I have that question for Binru a little bit later, it looks like your first company was a super success single market, which is Singapore only. Whereas most of the companies that I see in Singapore are based there, but they look to expand outside very quickly. Why did you focus on a single market, and why did you not think of expanding out?
Yeah, sure. I think the success from what we did was not so much just looking at a single market, but a single use case first. As a startup, your brand is built around what you do first, before where you do it and how you do it. And what we did in the first instance was to build a digitally focused life insurance company. Life insurers had traditionally been very person to person. We started our brand by positioning ourselves digitally. We did it in Singapore first because Singapore's regulatory environment was one of the most well-respected financial services regulatory markets in the region. And the thought process at the time was if you could be successful in Singapore, you could probably be successful anywhere because it's tough. So the single focus of Singapore was around it.
He meant regulation stuff.
Regulation is tough, exactly. That's correct. So it's about singularity of focus. Once we were able to demonstrate a credible, capable product in one place, it's only possible then to move on to the next one. And as we did, we then moved into Philippines and broader as we built the Singapore Life business from there. Chocolate, again, is the next business around looking at how do you get better returns on your cash. Again, chocolate finance will be known just for one thing, which is delivering better returns. Internationalization will come much later. Singapore comes first, always.
Yeah, it's a very interesting point for those of you who are startups that make sure that you succeed in one place really, really well. There is no doubt left in anybody's mind that is it a model that is scalable, and then you could look to internationalize. Binru, I have a question for you, which is on China, given your expertise in that market. But China over the last 2-3 years seems to be closing down. Looks like that the flow of capital into China and in fact from China is shrinking. Do you expect this to continue? And separately, I'd like to ask if globalization of technology that originated in China in the past 10-15 years, is that a thing of the past?
Thanks for the question. So I have spent maybe the last decade trying to bring the best of Chinese technology into the rest of Asia. Just so that you know, I am not from China. I am actually Singaporean. A lot of people ask me if I'm from China. I think there is definitely still market for it, but it has a lot of challenges. I would say starting back in, say, 2015, coming from the US big tech companies, because my background are all US big tech companies, I have been very, very amazed by the Chinese tech, but they do face a lot of challenges being profitable outside of China. And primarily it's due to different customer behaviors, asking for different things. In China, it's a large, single geography, homogeneous kind of customer. And I think customers want different things when you are a country of that size compared to, say, outside of China. Immediately from Singapore and Southeast Asia, there are very little small countries, right? The customers in China don't value IP that much. They value a lot of customization and maybe also cheap resources at their site. And that didn't drive in the Web 2 space, I think, due to that different customer wants. The technology from China to outside of China really face a challenge of how to make it light and agile for the smaller countries. So I think early 2000s or late 2000s, actually a lot of Chinese companies in Singapore, it is definitely coming down to a little bit of a drawing back. Yeah, but the ones that survive, I think, have a larger proportion of their business already outside of China. The ones that really started out trying finds that they have to go back and improve their tech a little. Yeah, so in different ways. And then, of course, the regulatory of asking them to make in-house, be self-reliant, I think definitely that's an era that will pass, in my opinion, because I believe technology is international. It may not be other businesses, but where the money is, the tech and the startups will go. In Singapore, we're seeing this wave of Web3 companies from China. And regulatories can ask you to stay for the Web 2, you'll see them going back, but Web 3, tons of them are coming out. I have personally moved from One Connect, which is a Web 2 company, to ChainUp, which is a Web 3 company. So I'll tell you a little bit more about the Blockchain Association in the later question.
Okay, great. So you're saying technology is still borderless?
Definitely still borderless, yes.
Okay. I think it's changing, isn't it? There are some borders coming up to say, you can't take my data out, that sort of thing is becoming a bit of a challenge.
So later on when we talk about blockchain, I think a lot of things will become increasingly borderless as the technology allows it to. And Chinese people are smart. I mean, we're seeing waves of Chinese talents that will relocate out of China, which is maybe not seen a decade ago. Yeah, so I think talent drain will be one of the problems that China have to deal with. And if they want to attract their talents back, they will think hard again about how to be making better money in China, I suppose, for the business.
Agree with you completely. Vijay, you have a question for David.
Yeah, I think NTU is a best example of how to produce incredible talent, even if you are in a country where there are not so many troubles. As an innovation hub, how do you drive innovations which are applicable for Southeast Asia, which is definitely not similar to as developed as Singapore is? My belief to my product manager always is that you have to feel the problem. You have to be the problem experience, only then to drive an innovation. And as an innovation center lead, how do you drive that experience, which is just NT of being in China, Singapore actually?
Okay, I think the mic works.
It's good.
So I think the struggle with Southeast Asia is that the markets are very fragmented and currencies are different, languages are different. So if a startup is trying to scale into each of the different markets in Southeast Asia, generally their preference is go into the larger market, Indonesia, which is 250 million pop. So there you have one language, but even if you understand Indonesia, actually the language spoken in Java is different from the language spoken in some other parts of Indonesia. So it's very disparate. But so our startups tend to look at the much larger markets where it's like India, China, USA, where you have very large homogeneous markets and I can understand what the regulations are and try and scale into there. And if you try and scale individually into each of the Southeast Asian markets, sometimes they run into trouble because the purchasing power is not necessarily there outside of the urban metropolitan cities. So if you look at Thailand, effectively you're scaling into Bangkok. There is no market in Pattaya or Phuket, right? If you're going into Malaysia, it's probably Kuala Lumpur, Penang. And Indonesia, it's Jakarta and maybe some other second-tier cities in Java. So Philippines, it'll be Manila. And the population size in each of these urban metropolitan cities is much smaller than the TAM market that you think that you're addressing. So for 250 million people, if you're addressing the underbanked in Indonesia, okay, you can scale beyond the urban metropolitan cities. But we've also, like many years ago, we had a startup that built a payment system for e-commerce and wanted to scale into Indonesia. They built the full stack, and then when they went into Indonesia, they realized that payment of cash on delivery. So effectively, they had built a Ferrari that was meant to drive only on potholes. So they had to re-engineer the whole stack, right? Because there wasn't a culture of paying by credit. Credit cards were not well established in Indonesia. So if I bought something online, I expect cash on delivery. It wasn't. Yeah, whereas in Singapore, it's like payment by credit card, right? So culturally...
Vijay may disagree because last time your Singapore FinTech Festival, his credit card didn't work.
Yeah. So yeah, I think there are cultural, I mean, like to what she said, There are definitely cultural differences. You know, we've seen like the Alibabas come into Singapore and they haven't made money. It's been in the red for the last 6 years since they bought Lazada. So there are definitely cultural differences in the way people buy and behave online.
Yeah. One of the things, just to, sorry, you were going to say something.
I was going to say that if you are not a customer, how do you innovate? And you're saying that it truly is a struggle for people to sit in a country like Singapore and think about Sumatra, Java, or New Delhi, or Bombay, or KL, and so on, because the local flair definitely matters.
Yeah, yeah.
Okay.
Yeah, I mean, so in my startup, we make enterprise software for banks, and we spent 2.5 years trying to sell into Asia Pacific. So Indonesia, Malaysia, Vietnam, Philippines, every country we went to, one, you don't get paid enough. Second, everyone has a unique language speaking requirement. Everyone requires a local legal entity. They are not early adopters of new technologies. So we just shifted focus to the US. We're very interested in India, given the scale that's available. So all of you startups that are in India, I think you're in a very envious position, given what's happening with the Aadhaar tech stack, what's happening with the entire India tech stack, in fact, and the scale of opportunity that you have, the total addressable.
Can I take his question on the Singapore being a center and things being developed?
Sure.
Is it relevant to Asian market or ASEAN market? One thing Singapore does well is the regulation part. What we say that you bring a solution which is adaptable for an Indonesian market or a Indian market or a Thai market, but take our regulation. Ultimately, the regulatory aspiration from each of the country is to have high standard regulation. So you bring your model, operate to Singapore regulation standard, you have the best of both. So I think that's where Singapore plays a big role. To give you the regulatory strength you need to have to operate in the market, ultimately you're taking a risk.
So your answer is that if India has India's stack, Singapore has regulatory stack. I think that is what the big...
But that's what we're trying to drive at.
The high bar and the trust and the integrity of the whole thing. Vijay, what are next untapped areas in the payment space in India, in Asia Pacific and globally that you think new capital will flow into or more capital will come?
So let's understand the movement of money is the most important limitation, restriction, or the thing that West did not do the best way. The best part I can tell you is if we are in Singapore, India, or any of the Southeast Asian countries, the money transfer between bank account are nearly instant and they are all the time 24/7 available, which is not the case for now. We can talk about whether you're in US or Europe. Versus now the next stage that I believe is that the funding sources will change. Today we are paying from our bank account. Tomorrow we'll pay from all the asset classes or the funding sources that you could change. For example, like it could be credit, it could be insurance, it could be wealth. So real-time payment from a wealth account, we saw the flare of this in China. Real-time payment from insurance account, that will be the innovation obligatory again from Asia. So for example, like you are in a hospital or a pharmacy store and the payment is showed up, the QR is showed up, you are scanning. In real time, you are figuring out what is the real-time adjustment.
Which pocket to take it out.
Which pocket to take it out, and you are showing the payment. So I think once the rails are clear, then innovation on the merchant and consumer side are the next level of innovation. I'm very proud to tell you that we started to build a consumption credit buy now pay later. Mostly buy now pay later is associated with a lifestyle, meaning I want to buy an iPhone, but I have only 15,000. That's an EMI product that India is very fabulously doing and so on. But we thought that can we create a everyday credit? For example, like let's say you are a sabji wala, you buy credit every day in the morning and evening, or you are a normal life which you have a register on a shop where I'll pay you on a month end or a next month's salary. Can we solve for this? And here, as you understand, the merchant is not going to pay and this person may or may not be in the best of the credit stack requirements and so on and so forth. I am fabulously surprised and I'm fantabulously surprised. You will be surprised with as low as 1,000 rupee or 500 rupee credit. So, this is what I so much love about it, that India has solved the problem of giving 500 rupee and 1,000 rupee credit with the loss ratios that are very, very fractional is the word. The word is in few bips. The loss ratios are in few bips. I mean, that level of innovation or acceptance of the country tells me that the payment will be the starting journey point leading towards a credit democratization and reach the way the payment has reached. And that is when the economic wheel moves forward. So that is where
Got it.
my
So
bet
that's where you think the capital will
Can
move in
go
as
from.
well.
Yeah.
Okay, got it. Sops, over the last 30 years, Harvard Business Review recently came up with an article saying the world's holiday with history is now ending, where economics was preceding politics. Now we're going back to where we used to be 30 years and everything before, that everything was my country, me, and nothing about taking it out from there. It's obviously going to become very hard for startups to get capital then. You could build your product in one country, take it out to many other countries, and scaling would be easier. If scaling is easier, you can attract more capital because you're likely to generate revenue and break even very quickly. Is all of that changing now? Is the era of economics over politics reversing and we are becoming geopolitics driven?
And I'll add the question.
Let him, he has done a tweet recently.
I'm going to add one extra line to it. Considering the era of my country, my politics, my domain is getting primarily there, as a regulator, how do you see the problem of money movement?
Correct.
And are you favorable to one side of the world, to the second side of the world? Can you survive neutral? Your regulatory stack could be under what challenge and threat it is?
To the question you asked, Bindru, that is technology so exportable? I think I encourage all of you to watch a speech by Foreign Minister Jaishankar recently gave at the Carnegie Foundation. His speech was technology is not neutral. To basically explain the challenges we are going to face, the geopolitics of technology. Now, I would say counter to that argument, the recent India-Singapore payment rail connectivity.
Yes.
It's almost opposite of the narrative you just now portrayed.
Yes.
That will country wall garden their infrastructure to say that I'm big enough, I don't care. But India did exactly opposite. India was willing to connect to Singapore, their payment rails. Singapore is willing to connect the payment rails already done with Thailand. We are going to connect to Malaysia. And the Bank for International Settlement is proposing a multilateral infrastructure for payment system to be connected to help people like Vijay and Walter to build solutions on these rails which are interconnected. So in some sense, the Eastern market, you will see a lot of bilateral political willpower to connect infrastructure. On the capital side, you will see a massive surgery because most of the capital, unlike him, has taken mostly Japanese capital. And where is the capital source from? US? All over. Mostly America, US. So his capital source will have a problem now because the Western capital, which is now largely fueled by Silicon Valley, will see a massive correction. So the capital flow, investment flow, will see some massive shift. I think a lot of Eastern capital family offices who are holding traditional capital must step out. And I think if I go by Singapore number, Singapore's family offices and private capital is close to $2.5 trillion. There's a lot of private capital sitting in Asian market, in Singapore, Hong Kong. Can that capital be deployed as a response to the West capital going down post this crisis happening for last 48 hours? So there will be that correction, there will be the opportunity for capital to be redeployed. However, this time the capital will come with a lot of risk obligation, a lot of better control. There will be a lot of expectation on profitability. I don't think that appetite to fuel capital on a future profitability, which is 10, 20 years from now, will be a story anymore. You got to demonstrate serious profitability path to get those capital. But infrastructure connectivity will happen. Capital will be still there, but much more serious capital with founders committing their profitability thinking on top of the big ideas they bring into the table.
Understood. Got it. Binru, a question for you. So, in the last 2-3 years, and given that you're president of the the Blockchain Association of Singapore, there is, a blockchain potential outside of crypto. And what are those areas where blockchain can potentially continue to attract capital in the coming 2 or 3 years? And is this in the space of gaming, or is this NFTs, or is it maybe non-retail SME institutional payments areas? Where is the growth for blockchain in the next 2 to 3 years?
Yeah, thank you. Yeah, so I run the Blockchain Association now for 3 years in Singapore. We have seen growth in the last 3 years from 30 members to now 450 members.
Wow.
So it's a good half of them are from China, right? And so very, very good Chinese blockchain talents in Singapore. And you can also see that where I mentioned earlier about Web2 Chinese companies having difficulties being profitable outside of China, you see a different starting point for Web3. So in the SaaS area, China started maybe 10 years later than US. But in the Web3 area, they started on par at the same time. So everyone grew kind of globally at the same time. So we are very bullish from the association perspective with regards to blockchain continuing to make progress. Yes, there is a winter now. So outside of crypto, of course, within crypto, you will see a lot of challenges. But actually, if you look hard into the crypto space, you will find a lot of very good tech from the crypto space, right? The very first example is the technology for exchanges, right? So I actually feel that it's not blockchain everywhere kind of thing. Really, it's going to be specific areas. I think it was everywhere. It's past the period of time that is a lot of hype. It's going to come down to some real use case. So I've moved on to a company called Chaina. We basically build exchanges. We're not a crypto exchange, but then we build crypto exchanges. And within the exchange, if you look at the exchanges, maybe a central exchange of the country or maybe other smaller exchanges, they are mostly manual. And if you look at the crypto exchanges, they are highly automated. Yeah. So just the exchange tag alone, from wallet as a service or listing capabilities, I think in the capital market space, that will be the first one that you can take the tag out of the crypto ecosystem. That will be the first biggest opportunity. Then, of course, there's been a lot of hype about NFT and stuff. I really think that's going to still take a bit of time. But where wallet as a service, as in central bank digital currency, facilitating fiat to crypto or to CBDC, I think those would take off from a payment standpoint, kind of as a branch of payment for sure. And then the last thing I would say is probably digital assets, right? So and a lot of POCs on digital assets, but for sure outside of crypto, that's the biggest opportunity yet to be broadly explored, but we're seeing lots of potential there. And then with the crypto winter, also a lot of banks are taking the opportunity to address the demand for digital assets or digital currency in some form via securitization, tokenization. It's not really taken off from a profitability perspective yet, but the tech from the Web3 space is definitely going to help in that area.
Okay, Vijay, you have a question for Binru.
No, actually, I have a question
For David?
David.
Okay.
So, David, I mean, I'm truly fascinated by what NTU and Innovation Hub have been doing. The question I'd like to ask you is, what do you think that we are missing in Asia, or what should be the focus that Silicon Valley, which is considered the innovation center of the world, we are seeing that capital will be accessible, risk capital is going to change a little bit of center of gravity will tilt towards Asia. But what will it take for us Asians to be looked up to as an innovation center, and Singapore has a chance on it? And what would there be to be done or not be done?
Vijay, Professor Lam is sitting there. He keeps on asking, who is going to fund his next research? You saw the billionaire here, right? Okay, so.
So it's interesting when you talk about geopolitics and economics, and then you talk about the blockchain, and I think that one of the constants, if you look past the noise, on a 10, 20, 30-year projected timeline, the constant is that Asia continues to grow, the middle class continues to evolve. So then the question is, what does the middle class aspire to in Asia? That is your addressable market, right? And if you look at the addressable market for the middle class who are growing richer in Asia, what do they aspire to? we shop globally now, right? The middle class in Asia buys things from all over the world. We buy things from Amazon UK, Amazon US, we buy things from Taobao in China. We travel internationally. And yet, when you look at the global banking system, it's still very localized. The regulations are, in that sense, local. So when I travel, I used to have to spend on a Citibank credit card. They gave me points for FX. You know, the more points you spend overseas, the more you spend overseas, the more points you gather. But it was actually, what you realize is, you know, they were shafting you because the FX rates were really bad. So what does the middle class want? The middle class wants a fair deal. He wants to be able to buy things on Amazon at a fair exchange rate. So you have things like Revolut and Wise stepping in. But then if you move beyond payments, then what does that middle class want to do? He wants to save. He wants to save, he wants to invest, he wants to spend money for his children to go to the UK to study, or the US to study, or China to study. But the problem is when you are trying, if you're a parent and you're trying to send your kids to the UK to study, and you have to open up a bank account in the UK, and let's say you're from Vietnam, it's very difficult for you as a Vietnamese to open up a bank account in the UK. The DD and the KYC and AML takes a long time. Not to mention, even if you're a UK company or citizen, to open up a bank account with Barclays or HSBC takes forever. But the arbitrage came from Wise, Revolut, and some of these other digital banks. So you know, what I'm saying is that the Asian population is growing richer, the middle class is growing wealthier. The middle class has aspirations where their travel and spending are global, not local. How do you address the needs of that middle class segment that's growing up? That is the ultimate middle opportunity for fintechs in Asia.
Okay.
This is going on you then.
Okay.
This is genuinely my concern. We Indians are in the midst of incredible market and opportunity and addressing. So this is a question on behalf of what we are seeing here from your vantage point. Will Asia be the market of world, or will Asia be the producer for the world? And I'm talking technology, I'm talking B2B, B2C. You can cut them as you prefer. Risk capital is coming.
You're expecting me to make the answer for that?
That's what
Okay.
I think what I'll do as a regulator, okay, he can give the insurance side of the business, you can give the tech side.
Okay. Well, insurance, you know, over the last 7 years, insurance funding continues to come down. And, you know, this is based off performance of companies that got funded and their IPOs underwhelmingly low. Is that something that I want to add in?
No. Is Asia going to be the market of technology for other companies?
A bit of both. So I think just a lot of discussion around payments. I think there is an evolution coming which hasn't really been spoken about much. We spend a lot of time talking about payments and facilitation of payments. I think in the future, the next level of technology is no longer going to be about payments facilitation. It's going to be about changes in the change in ownership of money, not in the physical movement of money. So money will stay in one place. It's just who owns that money will change rather than actually sending the money from one party to another. I think that's the next layer of innovation in our space, and I think Asia is absolutely perfectly suited to do that. And Web3 is a fantastic gateway into that stuff. To your question on insurance, insurance has traditionally been one of the most profitable financial services kingpins or sectors, right? Margins on insurance products have been really, really high. The problem with funding for insurance companies and insurtechs over the last while has been that it takes quite a long time for those margins to emerge.
Correct.
And it's a very, very heavily investable industry. To get to there, the infrastructure required is quite high. So your pathway to profitability is very, very tough. I think a lot of insurtechs have failed dramatically because they're focused too much on the tech and not on the full stack. The tech has not been able to be implemented into lethargic legacy type of insurance companies. And where they've tried to compete on full stack, the impetus of the old guys who have got lots of profits and tailwinds have really, really just squashed them. So the delivery's been really, really low. But lots of fun to be had in the space.
Okay.
To add his question, let me give he's getting restless with that question. Asia will be the market and producer of financial product. but we should not always count Asia alone. Global South, Latin America, Africa, and Asian market. To add these three continents, they have the biggest demand, the best demographics to aspire to the future growth. People like Walter, Vijay, the best super success in the next super success will come from Global South. Asia will take a lead because of our technology maturity, regulatory maturity, and experience. So it will be a leader for a while, but the real end point is the Global South.
Got it. Excellent. Okay, so I have a very interesting part. We have 3 or 4 minutes left. I want to quickly go around and ask each of you 3 questions. And these are all, yes, go ahead. You want to say something? No, okay. Are you ready? Okay, what is the number 1 advice that you would, Vijay, give to startup founders for 2023?
2023, bother about money in the bank. How do you spend it? Capital allocation is top of the pop in your mind.
Sobs, what advice would you give to founders for 2023?
I think founders should preserve cash and look at profitability and start building risk management strength.
Risk management. Walter.
The first thing you need is a very nice T-shirt. If you have a nice T-shirt, you're bound to be successful. If you don't have a T-shirt, you're in big problems. But the real focus needs to be just do one thing. Do one thing incredibly well. Do it in one place with one target customer segment. And if you can do that, then you can move on. Of course, preserving capital is the thing. There is not a lot of capital coming easily, so raise as much as you possibly can in the first round. Dilute yourself as much as you need to survive, but take as much as you can because second rounds are not coming. Yeah.
Take as much as you can. Binru, what is your advice to startup founders?
Definitely being cash flow positive from day one instead of relying on VC funds. Yeah.
Okay, David?
I would focus on needs and not wants if I was a
Focus
startup.
on needs. Okay. Vijay, I have my second question for you. What is your number 1 hope from policymakers in 2023? There's one sitting next to you, but...
Yeah. The global risks are outrageously different than previous era because of the bordering, etc., that we are talking about it. So the stack needs to be clarified and aligned to what regulators or the government is saying. So clarification sooner, faster, and in a clear language. We saw what happened in crypto. We're seeing what is happening in SPB and so on. So clarifications sooner, clearer, more.
So we were in Singapore in a capital meets policy dialogue in November last year. And one of the most amazing things there was said by a regulator from Cambodia. She said, for us policymakers, if we do or if we don't, we are damned either ways, right? There is no running away from it. Sobs, what is it that you would say to that question? It actually pertains to you.
Well, I think anyway we're damned, as you said. So I would rather take that risk and go with the startup instinct. Because I like Vijay's tweet when this SVP crisis was happening. He said, he reminded himself that what SVP Bank did to him when he started his firm. Yeah. So let's not make one side of the coin story at the big narrative. Take a step back and think policy as an ongoing work in progress. We're getting better every year.
Yeah. Walter, what is your number 1 hope from policymakers for 2023?
I think policymakers tend to sweep the whole room clean with the same brush. What would really good is sometimes it's good for policymakers to look at the world a little bit like investors. Pick causes or things that they think are going to add significant value to infrastructure and get behind those fewer VC or those fewer businesses that they can really empower. Carve out special areas for them, focus on them and see them deliver rather than be a very blanket all-in or all-out approach.
Okay. Binru, what is your number 1 hope from policymakers?
From the association, I have seen the most passionate Web3 people, and I know that it is time for the regulators to do a little bit more in the Web3 space, but please take care of the ecosystem that brought Web3 to where it is today.
Okay, I know. David?
We deal with mostly deep tech at the university. So I think what we're increasingly conscious about is climate change. So tax incentives that drive capital investments into climate change related activities would be a good cause.
Okay, got it. My last question for each of you in the same genre is what, Vijay, is your number one demand from capital providers for 2023? And you have some big ones behind you.
Yeah. So there is no doubt about it. The dream decade of tech is done. The 2001 to 2020 are 2 decades of dream run of technology to get unlimited amount of capital without any question and doubt, with future risk and aspiration is done. Can we get back to rationalization and then optimization and then back to the work?
Okay.
You know what I said.
Okay. Sobs.
Same question.
Same question.
I would say capital providers should not take extreme conservative stance, because you got to still move on. So keep investing, but rethink your strategy, but don't close your wallet. Keep it open, please.
Walter?
I think most capital is capitalistic in its foundation. So the good and the bad of capital is that it acts in its own self-interest. So the question is always, is the capital being applied for the interest of the firm in which it's invested in, or is it in the interest of the capital provider? My request of capital providers is always to think beyond just the short-term end of your fund mechanics for how your capital goes in and comes out. Think more about the longevity of the businesses that you're building, and not just about volatility of financial statements or any kind of short-term things, but think about the business, not just about how much money you're going to make out of it.
Okay. Binru?
I'm very aligned with Walter. Profitability does take some time. So, of course, we do not want to take 10, 12 years, but then sometimes I think too fast turning profitable can kill the business.
So patience.
Yeah, patience.
Prudent patience, not as long as it was previously. What would you say, David?
So in deep tech, most of the VC funds tend to invest for a duration of 10 plus 2 or 3 years. So
Yeah.
the investment horizon is actually very long. And I think that despite what's happened with Silicon Valley Bank and Wall Street, I think that increasingly there will be a shift in the investment paradigm towards focusing on how we fix our climate problems. Because you can make all the money you want in fintech or Web 3.0, but if we don't have a planet to live on, we're all going to be dead, right? Our children and all that stuff. So I think we need more capital channeled into problems that afflict our humanity, our future as a species. You know, we don't have another planet to move to. We can't move to Mars, and
More long term.
yeah, we need to fix.
So basically, sustainable long-term capital, quite like in the healthcare space. You're just inventing a new drug, you have to take a 15, 20-year view.
Yeah, I mean, we can't really solve climate change with an app or a software. We really need investments into advanced materials, into carbon capture technologies, new ways of generating energy, new ways of dealing with plastics and recycling and all that. These are fundamental challenges. I think the Gen X and Gen Y created these problems, and it's up to us now to hopefully reverse some of these problems and find innovative solutions around them so that our children and future generations have a planet to live on.
On that somber note, let's thank the panel. Thank you very much for your time. Hope you found it useful, and thank you very much, everybody.